Let me now introduce our guests. We have three guests who join us on the show. Sudarshan Sukhani joins us on the technicals, Mr. Tulsian with some stock ideas and to analyze all the stocks that have moved through the course of the week, and Ambareesh Baliga who joins us on the fundamentals and tells us how we should approach the week to come. Gentlemen, thank you for joining me. Before I come to you guys, let me just apprise our viewers of all the events that they should keep an eye out on in the coming week. First up, in the last leg of the earnings season, watch out for some big ticket numbers like ONGC, Tata Motors, M&M, DLF and SAIL that will announce their numbers. We also have Coal India that announces its numbers on Monday. In other earnings, in the broader markets, watch out for Oil India, Jain Irrigation, NMDC, BPCL, HTIL and Tata Power as they report their earnings throughout next week. And the big news on the macro front, watch out for the GDP numbers for Q4 FY13 as well as fiscal year FY13, which will be released coming Friday, that is on the 31st of May. Now, after the disappointment that we saw in the Q2 and the Q3 GDP, the street is hopeful of some respite in the Q4 numbers, and for the full year, it will be imperative to see if we can hold the GDP above the 5% mark. And not just that, it will be a volatile week because we have the futures and options series that expires on Thursday. It will culminate one of the longest series for the markets. Despite the Nifty falling over 3% in the week gone by, it is still up 1% in the May series. Mid-cap banking names will be in focus because of high rollovers that we've seen in that space. And with all the volatility in the global markets, watch out for comments from the Bank of Japan Governor Haruhiko Kuroda, who will be speaking yet again on Tuesday. Now, there may be some subtle clues regarding the future monetary policy and the interest rate shifts, and you might see the Nikkei markets react to that and perhaps throw in some volatility as well. But those are all the cues. Let's head straight across to our guests to find out what they are expecting as we head into next week. Gentlemen, thanks for joining me. Ambareesh, first to you. This week our markets have, closed 3.5% lower. Perhaps that we saw that coming because of the huge move that we'd seen on the upside. But do you expect the cut to get arrested at these levels, or do you see more downside for the market?
No, in fact, we were looking for some correction, but the brutality was quite a lot last week, and I suppose the volatility is there to stay. Having said that, clearly I don't expect the markets to break too much more from these levels, as we have extremely good support at 5800. I don't even really see the markets breaking 5900, 5920 levels. I would suggest that as traders, people could look at buying at the current levels because we should see a bounce back next week. And it's, very much possible that we could move more towards those levels of, 6080, 6120.
Okay, so that's an optimistic view. Perhaps we won't slip below the 5920 level and maybe traders could buy at current levels. Let's ask Sudarshan Sukhani what the technicals are looking like. Sudarshan, I was speaking to you about this yesterday where you mentioned that 5970 is the Plimsoll line that you are looking out for on the downside. Just take us through that. What's the prognosis for next week and how should traders be approaching it?
Sure. See, we have seen that the Nifty has gone up with bits and pieces. It's taken a lot of trouble to reach 6,200 plus. But when it comes to the declines for the last 1 month or so, the Nifty's declines have been easier, the market just slides. This is the first warning that at current levels distribution is going on. In a process of distribution, selling is easier and buying or rather pushing of prices becomes more and more difficult. This is the second time we have suddenly slid from 6,200 to 5,970. We did this 10 days ago. So the 5970 level, that approximate line becomes important. Here prices have held and found support twice, once now and once earlier. If 5970 holds, then we'll assume that this support is genuine and a new rally starts. Whether this rally goes to 6100 or goes to new highs, we don't know. But at least we know that a rally has begun. So for me, 5970 is an important level. So far as the market is above it, we can consider buying, at least intraday buying. But once the market goes below this number, I would not buy anything at all. I would be a complete and sure seller, because when the Nifty is going not to 5900, then it would be drifting towards 5750 or even 5700.
Okay, so that's the important level to watch out for, the 5970 zone, below which the markets could crack further. Mr. Tulsian, hi, welcome to the show. You heard me rattle off a whole host of cues that are lined up for next week. In your mind, which is the most important trigger that you would watch for?
See, Sonia, one has to look for the global cues, what kind of indications we keep getting from the Japanese, Europe and America, because earlier we were only keeping a track on the US market and what will be its effect on our expiry. Because kind of long positions which we have been seeing, whether you talk of the pharma, banking and the late, long positions having got created in the capital goods sector are all seen quite risky. So any kind of negative, cues coming in from there and any tapering off of the inflow, FII inflow will also be creating the confusion and pessimism in the market, and that's the reason for whole of 4 days till expiry I'm keeping my cautious stance, because I'm expecting that probably 2 to 3 days will be dull and boring. You will be finding the market in a very narrow range with a mild negative bias, and one day could be the big negative which can make the Nifty to correct to about 60-70 points. This is just a guesswork, looking to the trend which we have been seeing for last 6 to 8 months, the range bound behavior ahead of the expiry. So taking a cautious view and expect that Nifty probably could correct to about 120-125 points by the expiry, but so those are the indications which we need to keep a track and reflect and see that effect reflecting into the Nifty behavior. Yeah.
Okay, fair enough. Ambareesh, the three big earnings disappointments last week were SBI, L&T and BHEL. Between these or among these stocks, is there any stock that you would buy on a dip?
In fact, L&T, we felt that yes, disappointment was clearly an opportunity to buy because going ahead, we still see the order, flows extremely good at about 20-22%. Looking at the growth of another 15-17% on the bottom line. In fact, we have a price target of about 1840, 1850. So in fact, we utilize that fall to buy in. SBI again, we feel that the asset quality should in fact stabilize going ahead, and again the fall which we saw was an opportunity to buy, and here also we have a price target of about 2650.
Okay, fair enough. So there are two opportunities to buy in the adversity, perhaps SBI and L&T. Mr. Tulsian, one question to you as well. There were two pharmaceutical stocks that cracked a whole lot last week. Wockhardt, which was down 30%, and Sun Pharma, which was down, post the disappointment that we got from Taro. If you had to buy either of these two stocks, which one would it be?
Sonia, I'm keeping my positive stance on both the stocks because the Taro effect may largely have factored into the price, and again going forward the kind of grip which we see on the Sun Pharma stock seem to be quite strong, so that will keep the price robust for the stock in the time to come. But if I need to choose between two, probably I'll go with Wockhardt because the kind of pessimism and the liquidations which we have seen in the stock doesn't warrant, because there is going to be a reduction of by about 10% in the top line and bottom line. So even if you take the conservative estimates, the share is now ruling at a P multiple of less than 8, which makes a good entry point. So amongst two, from a short-term point of view, I'll go with Wockhardt.
Okay, fair enough. So those are some stocks that our experts are recommending, but we're not done with stock ideas just yet. When we come back from the break, we are going to ask our experts what we should be buying as we head into next week, and if there are any fresh stock ideas that they have. But as we slip into a break, let's listen into some market opinion that we heard through the course of the week.
I think what we saw in the Nifty was a very sharp short squeeze that happened from the middle of April. As the market approached 6,200, we saw a very significant increase in the amount of macro hedge fund buying of puts. I do expect to see more downside in the next few weeks as the market normalizes a bit more. So potentially a test down to around 5,400 cannot be ruled out. I think that risk remains very elevated in the markets. I think what happened yesterday taught a number of investors, or reminded a number of investors that markets do not double every 7 months. One of the things that we have started to see is that the rise in the dollar is causing some unwinds of certain carry positions. Rise in the dollar and the move up in the bond yield is getting some way towards making people rethink the moves that they're seeing in the defensives in particular.
Our recommendation is equal weight, so we think India is pretty fairly valued versus history and versus peers. What is interesting is the surprise fall in WPI inflation, which has taken it to a level which traditionally does allow the relative PE multiple to re-rate, and that is getting some attention amongst our foreign clients. We're neutral on India, but with, let's say, an upside bias to be somewhat more constructive.
Welcome back. You're still tuned in to Taking Stock, where we're trying to decode all the triggers that are lined up for next week and tell you how you should approach it after the volatility that we saw in the week that went by. The Nifty was down 3.5%, but there were plenty of stocks that got battered completely. And let me head across to our guests to find out whether there's any buying opportunity there. Sudarshan, before the break, I was asking Mr. Tulsian whether he would buy into Walk Hard, and he said he would. I see that it is one of your picks in the list that you've drawn out for us. Tell us about why you would buy that stock next week.
Sure. See, we've seen strong stocks correct. That's not unusual. Everything that goes up goes through a correction. In case of Walk Hard, we saw a dramatic rally from 400 to 2000. In fact, my colleague Mr. Tulsian tracked it right from 400 onwards. Now this rally is going to end sometime and go through a period of consolidation, of correction. In case of Walk Hard, news triggered a correction. It's a correction still. 1200 is still much higher than 400, much higher than 800. And when you go 1600 points, you correct 800 points. There's no big deal about it. But the trend is intact. There is nothing to change the trend. Sometimes stocks react, a little more than necessary to news. I think Walk Hard's uptrend is intact. If that is so, then the current prices are a good opportunity. Since this may or may not be the right time for a short-term trader, it's certainly a perfect time for somebody who wants to build a position. Even short-term traders should go long in it. Just keep a stop loss.
Okay. Mr. Tulsian, the sector that got thrashed last week was real estate. I mean, we saw stocks like DLF, HDIL tank about 15 to 18%. And I noticed that all the stocks that you've recommended for next week are within that space itself. Do you see a lot of opportunity there?
That's right, Sonia. In fact, if you have heard me a while back, I'm keeping my cautious stance on the Nifty and on the market. And actually, that is the reason you have rightly pointed out that all the real estate stocks have taken a beating of 15 to 20%. See, my outlook continues to remain positive on the real estate sector, and actually that was the view, sounded couple of weeks back also, and probably market, having taken that, in fact, that has been the view of the market as well. So long positions have been created in majority of the stocks, which got liquidated because of the weakness which we have seen in the last week. So probably the resumption, the under ownership, the liquidation of the exit of the weak hands probably will see the renewed buying interest coming back into the stock. And since my view is positive on the real estate sector, I have chosen one stock from each area or each geography. So from Bangalore I have chosen Brigade Enterprise, from Mumbai I have chosen Peninsula Land, who will also be declaring their numbers on Monday, which are likely to be quite good because of the sale of their one of the property which they have developed of Dawn Mill at Lower Parel. And two stocks I have chosen from the NCR region. That is, one is DLF and second is Anantraj, because the kind of corrections or beating which we have seen in DLF also seems to be unwarranted, and we are likely to see the renewed investment based buying coming in DLF. And apart from that, Anantraj has been continuously reducing their debt. Recently they have liquidated some of their debt instruments as well. So overall, if you take the call on, I'm keeping my positive stance on the entire real estate space, but these are the 4 ideas I'm giving for next 1 week to 10 days view.
Okay, fair enough. Ambareesh, what about you? If you had to buy one stock in this market, which one would it be?
Banking space, again, J&K Bank. In fact, this bank has been showing extremely good results quarter over quarter. Even the last quarter, we saw 20% growth and close to about 23% growth in net interest income. Even going ahead, we expect like approximately about 12% CAGR over the next 3 years. And with the adjusted book value of just about 1 time, I suppose at these levels, it's an extremely great buy. In fact, we have a price target of about 1738, which is about 500 rupees higher than where it is right now.
Okay, so buy into J&K Bank, keep your price target at 1738. That's quite an upside from the current market price. That's enough about buy calls. Let's talk about some sell ideas as well, because the market is on a downtrend. So Darshan, any sell calls that you would recommend for purely for next week?
Well, I also had a buy call. So let me add that quickly. And that was for Coal India. Coal India is reporting earnings, but the stock price tells us there is strong support at 290.95. So because I like that stock for next week, I thought I should share it with you. That's buying in Coal India. I would feel next week will give us a lot of short selling opportunities. If there is a rally and that rally faces resistance, then a lot of selling should come in. One of them is Tata Motors. Tata Motors is already cracking. 300 is the utmost. That's the place where it has not crossed. So I would be bearish on Tata Motors. Look for intraday or even any other occasion, small rallies to sell into it. The second is IndusInd Bank. I think the banks are cracking. Now, it's not easy. Distribution is never easy. It comes slowly. But IndusInd Bank has been in a downtrend. That downtrend should be sustained on the process throughout the next week. So I would be a seller there.
Ambareesh, that's an important point that Sudarshan made about Tata Motors and the fact that it may see a lot more downside going ahead. The company reports its numbers next week. What is the sense that you're getting this quarter around? Because last quarter we saw the standalone business post a loss. No one was impressed with the earnings last quarter, although JLR did bail them out. What's the prognosis for this quarter?
This quarter, I doubt whether JLR will be able to bail them out like they did last quarter, because margins again they would be under pressure. And going ahead with the sort of a slowdown which we are seeing in China, I think the numbers for JLR going ahead also will be quite poor. So in fact, I really don't see too much of an upside for Tata Motors. So I think this is a great price for people to possibly sell and exit.
Okay, so sell and exit into Tata Motors. That's the word coming in over there. Thanks guys for joining me. I'm afraid we've run out of time on this discussion, but we hope next week is a better week than this one. You guys have a good weekend. Thanks so much for joining in. That's the word coming in from all our experts on how to approach next week. On the downside, 59.20 is the level to watch, while on the upside, you should keep an eye out on the 61.20 odd level. That could be the range as we head into expiry. But let's switch gears to the futures and options space.